Hi, welcome back to our YouTube channel. Our topic for today is what is FCPO and FKLI limit down. The reason why we need to cover this topic is for the past 2 years, both FCPO and FKLI suffered a few times of limit down. That's the reason why we need to understand how FKLI and FCPO react to this limit down itself. And FKLI and FCPO, unlike your stocks, the way they are going to experience this limit down is very different. So later I'm going to cover the difference between FCPO and FKL itself, and FCPO, FKL compared to stocks, their limit down is very different. Now before that, as usual, we need to do a disclaimer. Our video is only meant for education purposes only. There's no buy or sell call. For those who first time watching our video, please remember to subscribe to our YouTube channel and on your notification bell. Let's start with the first thing that you need to understand is where can you understand about this limit down. So first thing, this is all available in your contract specification, which is like your user manual. So the first thing, you need to go to bursa.malaysia.com, then you click on trade, you click on derivative, then you will get the information about this limit down. It's all spelled out in the contract specification itself. So for example, I screenshot from Bursa Malaysia itself. Later, I'm going to show it to you. But I'm going to summarize for your better understanding about this limit down itself. The first concept that you need to know about this limit down is we are going to compare the current price compared to the yesterday's settlement price to determine whether we have a limit down or not. So I repeat my statement. The first thing that you need to understand is we need to compare the current price as per now compared to the yesterday's settlement price. Not the closing price, be careful, not the closing price, based on the yesterday's settlement price. If anytime it is below 10%, then we have a limit down. But this 10% is not only for one specific contract months, it must apply or trigger for 3 contract months, meaning any three contract months that having compared to the yesterday's settlement price, they are more than 10% below, that it would trigger the limit down itself. But this excludes your spot month. So technically your spot month would not have this kind, or it would not trigger the limit down. Now, I'm going to summarize some things that is easy for you to understand. So let's look at the next slides. Now, this itself is the definition of the whole limit down, but you can read it by yourself, you can search it, and you can screenshot via Bursa Malaysia, but I'm going to summarize for your understanding. So this is something that's easy for you to understand. First thing, for example, yesterday's settlement price is at 3,000. 10% meaning is 300. So anytime if the FCPO price below 10%, then it would trigger the limit down. But don't forget, it's not only one contract month, it must have 3 contract months having lower or trading below 10%, then only it would trigger the limit down. Very different, unlike your stocks, right? Am I correct? So the first thing, usual situation, if it triggered, then we will have a 10 minutes of cooling off period. Then it will follow by a 5 minutes of pre-opening stage. As usual, before our trading, right, we have 30 minutes before the market open, we have pre-opening stage. So after the cooling off period, the same thing, we will need to have a 5 minutes pre-opening stage. You can start to submit your orders, but nothing will be traded. Then after the 5 minutes, then the market open, then your orders depends on the price that you have been submitted, whether it will be filled or not. Then it will follow by, they will start to move this 10% to 15%. So this 15% also based on yesterday's settlement price to calculate. So meaning you're going to trade within 3,000 to 2,000 to 550. So this is the usual scenario. But there are 2 special scenarios. If this 10% triggered last 30 minutes before the end of first trading session, then the trading will continue within this 10% limit for the rest of the first trading session. So this only applies if it triggered 30 minutes before the end of first trading session. Then our trading we will not experience this scenario. Can you see that? We will continue to trade within this 10% limit for the rest of the session. Then subsequently, second half, automatically the price will be reduced further to 15%, and during the day itself, we can trade within 2,550 until 3,000. So starting second half will be 15%. The second special condition will be if it triggered 30 minutes, the same thing also 30 minutes, but in this scenario is before the end of second session, then you are going to trade within the 10% limit until the end of the session. So unlike this, you are not going to experience this scenario as well. You are not going to increase to 15% as well. You're going to trade until the end of the session within the 10% limit. So this is a bit different compared to your, even you compare to your stocks, you can see that it's very different because you need 3 months to trigger the limit down, first thing. Second thing, you can see that different cooling off period scenario. And if you trigger 30 minutes before the end of first trading session, you're going to trade for the remaining, for the first trading session for 10%. And if you trigger 30 minutes before the end of second session, you're going to trade within the 10% limit throughout the rest of your trading. Now, this is for FCPO. For FKLI, they are also different. Can you see that this is being screenshot from the contract specification, which is, you can see the keywords. The first keyword is 20%. But unlike FCPO, technically for FKLI, it's very difficult for you to trigger this limit down. Why? Can you see that this 20% itself, 20% limit per respective contract months? You just imagine 20%, meaning that if your yesterday settlement is 1,500 and you need 20%, which is today your FKL, you need to reach 1,200. It's quite difficult. That's the reason why for the past 20 years, if I'm not mistaken, never triggered this limit down for FKLI itself. But don't forget, some of you will start to question, then is it that there is no protection for us as a retail? No, don't forget that FKLI, we have an underline. Your underline is your FBM KLCI. So if your FBM KLCI itself, there's one term called circuit breaker. Meaning, if based on the previous day closing, if our FBM KLCI closed or trade below 10%, your circuit breakers will be triggered. So when your circuit breaker triggered, anything that related to FBM KLCI, including their underlying, for example, like structural warrant stocks, FKLI, etc., will need to have the cooling off period as well. Once the circuit breaker is triggered, FKL will need to have the cooling off period as well. So indirectly, actually, FKL itself already suffering the limit down. So that's the reason why, unlike your FCPO, unlike your stocks, technically for FKI to really experience the 20% of limit down is quite difficult. So I hope that today, based on my explanation for FKLI and FCPO for both the limit down, it's easy for you to understand, and when you experience another time, you will get to understand better. Especially FCPO, many of you might not really know that it must have 3 months triggered the 10%, then only we will have the limit down. So some of you might notice that, my third month, which is the benchmark month, already triggered, but why there is no limit down being called? That is the scenario. So before I end, remember to subscribe to our YouTube channel and on your notification bell. My name is Ting Ting. I'm going to see you in our next video. Bye bye.